Hey everybody, Smart Silver Stacker here. Today is Wednesday, February 1st, 2023. It is Fed Day. Yes, we are going to be hearing from Jerome Powell later today as the Fed wraps up its two-day FOMC meeting. And I mentioned in the video that I put out earlier this week on Monday that depending on what comes out of Jerome Powell's mouth this afternoon, we may be seeing a bit of a pullback in the price of the precious metals. Now, as far as the rate hike itself, I think we're probably going to get a 25 basis point hike. That seems to be what markets are pricing in. If you look at the CME FedWatch tool, the overwhelming consensus is that that's what we'll get. Now, who knows? I suppose that the Fed could surprise us, but I suspect they're going to deliver what markets are expecting here. The real variable is going to be Powell's talking points, and investors are going to be looking for two things from Powell. They're going to be looking for him to comment on how high rates are going to need to go. So what will the terminal rate be in this cycle of rate hikes? And also they're going to look to Powell to discuss how long rates will need to remain elevated. And it's kind of funny to me, the terminology that gets bandied about here, as if 4 to 5% rates are elevated in any way. I mean, by any historical standard, these rates are still at the low end of the spectrum, but I suppose that when you have $31.5 trillion in debt, every point counts, and it may change the discussion about what's a high interest rate and what's not. Now, as far as the pullback in the price of silver, it's certainly not guaranteed, but if we do get one, I will be viewing it as a buying opportunity. I'll be looking to go into the market and probably get my hands on some more physical metal. And as far as a market pullback goes in general, we have been getting some pretty ominous warnings from names that I consider to be worth listening to. So we're going to be getting into that in today's video. And also later in the video, I do want to comment a bit on what's been going on over at the Wall Street Silver subreddit and the controversy surrounding that topic, so stick around. Today's video is sponsored by SD Bullion, my preferred source for physical gold and silver bullion. You can check them out with the link down in the description. Now, let's get into these warnings of a market crash. Now, first of all, to set the stage, at the time that I'm recording this video, around 10:30 a.m., markets seem to be in a bit of a holding pattern. All the major stock indexes, they're slightly red, but pretty much flat on the day. Same story with gold and silver, and really they're just waiting to hear whatever the Fed has to say this afternoon. And the fact that markets exhibit this behavior, the fact that they kind of hang on every word that comes out of the mouth of these Fed officials, this is indicative of the situation that we find ourselves in. Markets, they're only dependent on the Fed at this point. There's no real price discovery mechanism in these markets anymore. And I think that that's a bad sign. It's indicative of the massive asset bubbles that the Fed has inflated. And I also think that it's a sign of a very sick market and one that does have the potential to fall in a very big way. And we are hearing some very ominous warnings along these lines from investors like Michael Berry, who last night tweeted this very ominous message to me. It's just one word: sell. So not a lot of details there. Is he suggesting that we're going to get a crash today on Powell's remarks, or is this more of a warning of a looming existential crisis? Barry is leaving that for us to decide for ourselves, but I wouldn't take this as a good sign. This is a guy who has a pretty solid track record of forecasting financial crises. You just go back to 2008. Anybody who's read or seen The Big Short, you're probably familiar with his work. And then we also got recently a somewhat more in-depth warning from Nassim Taleb, the author of The Black Swan and Anti-Fragile, who I happen to be kind of a big fan of. And he's warning that the Fed's easy money policies over the past decade plus have led to massive asset bubbles being inflated. And he specifically cited the massive bubble in cryptocurrencies as indicative of how naive investors have become after all these years of low rates. And this is a quote from him. He says, "All these years, assets were inflating like crazy. It's like a tumor. I think that's the best explanation." Now, Taleb's partner and the chief investment officer over at hedge fund Universa, Mark Spitznagel, has also described today's market conditions as a tinderbox time bomb. And he says that we could be on the brink of a crash that will rival the Great Depression. So I do think that we should heed these warnings and make sure that we're getting prepared. And of course, none of this is financial advice on my part. I am just sharing my 2 cents. But myself, as for what I'm doing, obviously I'm getting into hard assets. I think that's probably the most important thing here. And as far as the stock markets, that sort of thing, I'm not liquidating any positions I have. I don't have a ton of money in these markets. Most of the investments that I have, they're in businesses that I believe will benefit from high inflation, which I do think that we are going to end up getting, mostly consumer staples, energy, gold and silver miners. And I'm not really much of a trader. I'm not trying to sell these stocks and these assets and then buy them back at a cheaper price. Just about everything I hold is some kind of a value play. Most of it pays dividends. And I really just plan on holding these things for the long-term horizon. So I'm not selling, but I do think that it's at least wise to keep some powder dry just in case we do get some kind of a massive crash, because there may be some assets that go on fire sale that will be worth picking up. And as far as silver goes in a market crash, one of the things that we've seen in the past when markets drop precipitously, like in 2008 or in 2020, we have seen the prices of the precious metals drop in a very big way on these sell-offs. But I don't necessarily know that that is going to be guaranteed this time around, because, this time it isn't a tech bubble or a housing bubble that we're living through. It's a debt bubble, the likes of which the world has never seen. And it is the sort of thing that could kick off a dollar crisis, major currency failure. And really, in my opinion, the whole reason that we hold physical metal is as insurance against just that type of crisis, against a crash in the dollar. So I have a feeling that investors this time around may want to get into this stuff, and they may have less confidence in the dollar as a safe haven this time around. It's just my take. And also, I will say this, if we do see a crash in the spot price of gold and silver on a major market sell-off, paper contracts and paper derivatives getting sold off, I do think it's highly unlikely that we will see the price of physical metal plummeting. What do I mean by that? Well, I think that what could happen is that we see the spot price drop in a very big way on such a move, but we'll probably witness soaring premiums on physical bullion, and that basically will just represent a disconnect between paper and physical markets. Now, one thing that I like about stacking is that no matter what happens in markets, the number of ounces of metal that you're holding, it's not going to be affected by the sell-off. So if you're measuring your wealth in ounces, which I think is a good way to think about it, you're not going to be affected. So, metal outside of the financial system, I think, is a great preparation for the kind of financial crisis that we may be on the verge of. Now, I don't think that there's anything wrong with a bit of speculation, having some money in these markets, but in my mind, physical metals are really a much more fundamental and important core position. And, I wouldn't invest $1 in the stock market personally if I didn't already have some security in the form of physical bullion in my custody. Now, I do want to change gears here just a bit and talk about what has been going on over at the Wall Street Silver subreddit. So if you're not familiar with this story already, there was a piece published on this blog called The Pickaxe, and it was picked up by Zero Hedge, so it's very likely that you have seen this one at this point. And based on the contents of this article and what I've been able to gather from reading on Reddit and Twitter, it does seem like Jim and Ivan over at Wall Street Silver may have been engaged in some fairly sketchy stuff. Everything from inflating follower numbers with click farms, using those elevated numbers to charge advertisers inflated rates, and also some lack of transparency on what they were doing with the funds they got from their GoFundMe campaign to create silver billboards. And look, to the extent that these guys were dishonest with the stacking community, from what I understand, they have been banning some users who have brought this stuff up on the subreddit. It's not a very good look. It's not good for the stacking community overall. But the good news is that there's some alternative subreddits already popping up. So, there's plenty of places for stackers to get together. And I will also say that it's important not to get too caught up in this frenzy of finger pointing and infighting and accusations, because whatever they did, Jim and Ivan from Wall Street Silver, they're small potatoes compared to those who are actively engaged in debasing the dollar, printing it into oblivion, and getting us engaged in conflicts all around the world. So all I'm saying is this, don't play into the divide and conquer mentality too much, Now, I'm probably opening a can of worms by even touching on this subject, but it's kind of hard to ignore. It seems relevant to what's going on right now. So let me know what you think about this controversy down in the comments. So to sum it up, today we want to keep an eye on what Powell says. We may get a pullback in the metals here. could provide a good entry point. Of course, we might not. You don't know what you don't know, and I don't put a lot of faith in my ability to time markets personally, but I do think it's something to watch out for. And as for major market crashes, well, it does look like markets may be ripe for one. It certainly could happen. That's why I'm happy to have some assets outside of these financial markets. And as far as preparedness for an economic calamity, don't forget that it's not all about money. Make sure that you've got your emergency food, your water, all your essentials and necessities put away too, and also a means to protect yourself and your family, and maybe some plans for what to do if things really go south in your area. Because if markets do crash and we do get sent into economic collapse territory, who knows what kind of trouble could ensue. So that's it for today, everybody. Thank you very much for watching. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.